joining me now to break down more of the market action and some of the seasonality that's at play broadly speaking as we look to round out 2026 is NYSE Senior Market Strategist Michael Ranking. You see him on the screen. Michael, welcome.
Hi, thanks for having me back.
Yeah, great to chat with you this morning. And what is behind the market action that we see?
Yeah, so we saw a pretty abrupt change in complexion of what we were looking at this morning. Overnight and this morning we had some pretty positive tech and retail earnings, which had futures trading modestly higher. And at 9 o'clock this morning, we had a story coming out of the information saying that Microsoft had lowered their internal sales quotas for AI-related products. Right, that's taken Microsoft down a little over 2% in the pre-market. We saw futures kind of move down very quickly by about 0.5%. Right, and you're once again, just as we had kind of regained our footing around some of the AI trade, last week with the pretty significant rebound we had, right, we're now once again kind of drawing that back into question, so that could lead to a rocky session.
Interesting. Okay, so we did get the ADP numbers, and we've been talking about jobs for a long time now here, but believe it or not, that jobs report on the private sector did not change expectations for a Fed rate cut next week. Does that hold much weight as we await that decision?
Yeah, so I mean, as we have, coming out of the government shutdown, we haven't been seeing, that government economic data. We haven't seen non-farm payrolls report. That's not going to come until after we have the Fed rate decision next week. So in lieu of that, markets have been focusing on, kind of that private sector data. The ADP jobs report, came in below expectations, falling for the fourth time in 6 months. Right now, that was completely driven by, a decline in hiring in small businesses, which fell about 120,000. But we continue to see, kind of hiring in medium and large-sized companies, right? And if you look at, large companies over 500 employees, they've continued to hire over the last 6 months by a little under, kind of 50,000 jobs. Now, as you pointed out, markets have been pricing in, pretty close to 100% probability of a rate cut, next week. That's come despite the fact that, like, a lot of the data, has not necessarily signaled that we were, that things were really, really weak. Now, this, kind of the jobs report, kind of does add to those, to the concerns around, kind of the labor market. The question, I think, coming out of that meeting is not necessarily about whether they're going to cut, but kind of the messaging on the back end of that, right? There is a pretty good chance that you're going to see the Federal Reserve cut rates, but deliver a little bit of more hawkish message, saying that the bar has been raised, for further, kind of rate cuts going forward. The other big story around the Federal Reserve has been, kind of the fact that, President Trump has said he's decided who is going to be the next Fed chair, right? And that's, kind of for, the odds-on favorite for that is Kevin Hassett at this point. Yep. And we're kind of awaiting, kind of that announcement. Yeah. He suggested, kind of in the new year.
Look, speaking of some of the changes that we could see in D.C. next year, we did see SEC Chairman Paul Atkins here at the New York Stock Exchange yesterday, talking about his goals, of course, sworn into that role after he was nominated by President Trump earlier this year, specifically encouraging really companies to tap the capital markets with rules that might make it easier for smaller firms, per se, holding them to different standards, traditionally, at least initially, than these larger firms. What does that mean for capital markets?
Yeah, I mean, look, it's really supportive, right? And we're hoping that kind of continues to really open the window, kind of for the kind of return of the IPO market, right? We've definitely seen a pickup there this year. The pipeline remains, very strong, and so we're all very supportive of kind of the SEC efforts.
Yeah. Now, in terms of where we head from here, earnings season starting to wind down this week a bit. We talked about the AI trade, cryptocurrency in focus as well. Any correlations that you're seeing between the crypto market and the equity space?
Yeah, I mean, it's really interesting because you've seen a very big risk reduction, in crypto specifically, right? And throughout much of the year, that's been this leading indicator, for equity market performance. And we've now started to see some of those correlations break, right? And it's actually, kind of somewhat positive, right? Because we'd seen a lot of, a lot of speculation happening, kind of within the markets, kind of in the summertime, coming out of the summer, right? And we've seen a lot of that kind of unwind, right? And so I think that what that does is it becomes more supportive of a broader, kind of more sustained equity market rally.
Mm-hmm. And the seasonalities at play. I mean, traditionally, December is a pretty strong month for stocks, right?
Yes. So that's the general story, right? That historically, December has been a very strong month for equity markets. However, in the last 5 or 10 years, it hasn't been quite as strong. If you look over the last 10 years, the average return is actually slightly negative. We still have positive returns over the last 5, up a little under 1%, but you're only up a little over half of the time, right? And so that kind of goes back to something we had talked about coming out of the summer, and that, kind of the positive where we bucked seasonal trends in the September and August timeframe, which tends to be a really negative period for markets, right? Markets traded well. We had highlighted at that point that when you have that situation, Q4 does tend to be a little more flat than it does in years when markets had moved lower, as you don't have to make up a lot of that lost ground. And that's kind of what we've seen kind of here in Q4. And then in terms of seasonality, right, next year we move into the midterm election year, right? And within the 4-year presidential cycle, that tends to be the worst year for equity market returns within that 4-year presidential cycle, particularly in the middle of the year as you approach those elections. Now, the offset to that, right, is that we have some potential fiscal, the one big beautiful bill is going to add to some of the fiscal kind of stimulus that we have, kind of in terms of kind of tax returns and kind of the tax offsets for companies. So that could provide a tailwind to potentially kind of buck that seasonal trend as well.
NYSE Senior Market Strategist Michael Ranking joining me in studio. Michael, thank you as always.
Thanks for having me, and thanks for fixing those words there.